Ladies and gentlemen, unfortunately, I don't have a webcam. I'm away from the office for the next few days, so you won't be able to see my face, but you will be able to hear my soothing voice. So that should be good enough for you, hopefully. The market has been experiencing some pretty major turbulence. I've got a few things to show you here today. First and foremost, I want to show you this line stemming backwards from 2021. I want to show you, and I want you to focus on this. It is still intact as of now. Nothing has changed on the macro at this point in time. And I feel the need to emphasize that because for the first time in a very long time, my community is actually predominantly bearish right now. I said what comes first for Bitcoin one day ago, and 57% of you out of 1,400 votes, which is quite a significant sample size, said we'd see 86K first. Now, I don't know if a lot of you guys understood the implications of Bitcoin hypothetically going to 86K, but if Bitcoin did go to 86K, that would be a structural macro breakdown. So it's not just as simple as, oh yeah, we can go down a little bit more. If we go down more, if we go down to 86K, we see a structured macro breakdown, and also, we see something that's a bit more nuanced, a breakdown from a very, very long and very hidden trend, okay, which lies within an extrapolated part of the 2021 cycle, which we'll look into today. That's very important that you understand that. No one really understands that. I haven't seen any other YouTuber talk about it, so I need to explain that to you today. So quite a few things to look at. We'll look into long-term, we'll look into short-term, and we'll try our best to shed some light on the darkness of the market right now. Before we get into it, guys, please check out the exchanges. We have Bitfinex and BitGet. Bitfinex is global, non-KYC. You can sign up from anywhere in the world. So it literally takes 15 seconds to sign up. With my referral link down below, you will get a 15% trading fee discount attached to your account for life. And you can get that very same discount on BitGet with my referral link down below. 15% attached to your account for life on every single buy and sell. Guys, you're trusting exchanges with your money. You're leaving your money on those exchanges. You're hoping they keep it safe. You're also paying the money and fees. So you better be on a bloody good one. And that's why I've got these two here for you. So use those links down below, depending on your geographical location. And let's get into the content. Right, so I just want to start by emphasizing this, and this is very, very important to emphasize. As I mentioned, 86% or 57%, sorry, of my community says we're going to 86K first before 108K, which would be an all-time high. So most of you, according to this poll, are bearish right now, at least short-term bearish, maybe not macro bearish, but I believe that if we went to 86K, that would probably result in a significant amount of macro damage, which perhaps you are not aware of. Guys, this support line here from 2021, it is the support right now. It is the macro support zone that we're holding. There's just no other way around it. If we go to the daily chart, in fact, we can see it. We can zoom all the way back to 2021 to these two highs in the last cycle. We can see them perfectly retested, cutting right across. We can see them acting as the foundational support, the thing holding up the structure right now. This entire round formation is being constantly ping-ponged off of this support zone. And just recently, as of yesterday, on that most recent drop, that was another retest of that support zone. So we can't really go down much further without doing significant damage. Now, I'm not saying the bull market ends if we lose this level. I'm just saying significant damage will have been done. Now, for me personally, in order for the bull market to have absolutely 100% definitively ended and the 4-year cycle to be completely invalidated, we need to be seeing a lot more than a drop below 91K, obviously. Something like the Gaussian channel would need to see a breakdown as well. The fact of the matter is, it will take an unsatisfyingly long amount of time to confirm the complete and utter end of the bull market, given how much rests on the 4-year cycle remaining around. The 4-year cycle's been around for, 13 years? Okay, it's going to take a bit more than a small drop to invalidate it. But the problem is, by the time the 4-year cycle becomes invalidated in a bearish scenario, your altcoins will be absolutely freaking decimated, and Bitcoin will be down in the 70K region most likely. So, you can't really wait that long. What you can do is you can focus on the immediate term macro support, which is why I'm focusing so heavily on this line from 2021. This is the immediate term macro support. Now, what I will say is this, we can see short-term deviations. Any short-term wicks we see below this level, hypothetically, they're not the end of the world. You're right. It's very normal to see short-term deviations about major levels, but right now, just know that that level is holding. And right now, there is actually no macro damage. And I'm going to tell you why I think Bitcoin would really, really, really benefit. It sounds stupid to say, but it would really, really benefit from having the bottom be in here. We don't really want to go much lower. And it goes further than just, oh, we've got support here. It goes into cyclical trends, right? So bear with me here while I explain this. It's quite complicated, but I really highly suggest you try and wrap your head around it. I'll try my best to explain it as clearly as possible. There's a very strong argument to be made right now that Bitcoin right now in this green box is copying this green box here. It's copying what it did in 2021. Now, the first argument supporting that is that, of course, Bitcoin moves in a 4-year cycle, and therefore cyclically in different cycles we can compare previous parts of previous cycles to current ones. That just makes sense contextually. Another reason is if we're going from the 2017 all-time high to a breakout above the 2017 all-time high and the start of that green move, which I'm suggesting we're copying right now, we've got 1,100 days. If we do the same thing this cycle, we've got 1,100 days again. And the third reason is if we're looking at what happened to Bitcoin dominance in that green move in 2020, we saw Bitcoin dominance really start to fall off. We saw altcoin season start to begin in that green move in 2020, and we've seen exactly the same thing this time. Bitcoin dominance falling off and really starting to plummet, and altcoin season really beginning, and the attention in the market really coming on altcoins during that period of time. So for me personally, I look at these two cycles, look at this cycle here, and I see very clearly that this green move is relative, or at least very similar to this green move we're seeing here. It's the first parabolic move above the prior all-time high. It's really the first parabolic step of the bull market as a whole. And so given the similarities, now they're not the same, don't get me wrong, but given the similarities, we can hence take some measurements from this move and try to extrapolate them forward and predict, for example, how deep a correction here should go. So in 2021, Bitcoin actually corrected downwards about 31%. And so far, Bitcoin has corrected downwards on a similar move from 2021, about 15%. So how much lower should we go here, right? What does diminishing returns have to say about this? Is there anything we can harvest here? Well, there is. What we can actually do is we can measure the size of the move in total in 2021. That's the size of the run up, which is about 110%. And we can measure the size of the correction, which is about 31%. We can plug this into a formula here, or a calculator, and we can simply say what percentage of 110 is 31. In other words, how much did we give back, right? We moved upwards so much. How much of that move upwards did we give back and correct? We moved back, we gave back 28% of that move to the upside. So we know now that in 2021, we moved upwards a certain amount, okay? And 28% of that move to the upside was fed back to the market in a correction. Now, given the fact that this is similar in structure, perhaps it can also be similar in a corrective structure, right? So let's go ahead and just apply. Bitcoin has moved upwards on this move so far, about 56%. If it was to give back 28% like it did last time, and therefore what is 28% of 58? Because we moved upwards 58%. And if we are going to correct a similar amount to scale as we did in 2021, we would be correcting 28% of that initial move to the upside. That gives us the number around 16.2%. And therefore, we should, if we are following that 2021 fractal perfectly, we should continue to correct about 16.2% from the peak here, which would bring us down to around 90,000, 91,000. Within a percentage margin of error, it would bring us to something like 92,000. So basically, right, if we are copying 2021, which all the data at this point currently suggests we are doing, and if we are copying the correction to scale relative to the move upwards in 2021, if we are doing all of that, we basically should have found the bottom here, more or less. And so when 57% of you say we're going lower to 86K, I struggle to accept that you guys are necessarily following all of the implications of that. Not only would we break down below this support line here from 2021, but we'd also ruin quite a strong structure that we're following from 2021 right here, which suggests that the bottom is basically more or less in at around 90,000 to 92,000. So there's actually quite a lot resting on Bitcoin bottoming out here. All I see is two definitive ranges here. We have the range, we have the broad range, of course, but we have two kind of zones, right? We have the upwards accumulation zone, which is a pattern of exhaustion, right? Grinding to the upside before a breakdown. We broke down, and now we're entering an accumulation zone. And we have our breakout point, in my view, very clearly stationed at around 102,000. That is the level we need to break, of course, as that is the level that was confirmed as resistance after our breakdown from the first phase of this entire range, which was the upward exhaustion phase. So 102,000 is the clear resistance. We found this as resistance back here on the 19th after our resistance support flip. And we found it as resistance just a couple of days ago before plummeting downwards to 91,000 yet again. So until Bitcoin gets above 102,000, we are not in the clear. We are in danger, but we're not actually actively in a breakdown until this yellow line breaks either. So we're in this weird in-between phase. We're in limbo right now. We're in consolidation. And I'm not willing to say that the charts are bearish because they're simply not. We simply have not broken down yet. Now, are they bullish? Well, technically they're bullish because we're in a macro upwards trend. So yes, they are, because there's no lower low yet. We're not in a downwards trend. So yes, these charts are bullish, but they're not actively breaking out. Okay, so there's a difference between a chart being macro bullish and seeing an active breakout. The active breakout resumes at a rally above 102k, and the active breakdown starts if we break below something like this yellow line. We break below something like 90,000 flat. That's when the active breakdown begins. Right now, again, we're in limbo in a macro bullish trend. So it's still macro bullish, but nothing's actively happening right now. Now, as for like intraday analysis, it's quite speculative. We have this aggressive downwards channel formation that formed over the last couple of days. Of course, we were going to bounce from support after a channel formation like that. Broke the upside, finding resistance from around 96,000 to 95,000 now. Wouldn't be surprised if we retrace downwards to something lower like 92 or 93k and then swing back to the upside. That would be the ideal scenario, but again, it's just very difficult to predict right now. And for me personally, I like to focus on the more medium-term structure. None of that really matters. It's all just kind of noise. Something only matters if it is either Bitcoin going above 102 or Bitcoin going below 91 on a kind of not just like a short-term candle, but on a sustained breakdown. Those are the only scenarios in which anything actually matters here for the short term. So thanks for watching, guys. Leave a like, comment, and subscribe. Check out those exchanges there, Bitfinex and BitGet. Bitfinex being global, non-KYC, and BitGet being global minus the USA. So again, you're trusting exchanges with your money. You're trusting them, you're paying them fees, guys, all right? You're paying them literally every single time you take a trade. You want to be on an exchange that is worthy of your fees, that you're literally paying to them, and also trustworthy, historically speaking. And both of these exchanges meet those requirements. My links are down below. You can sign up with those links and get trading fee discounts on top of the already low trading fees of the exchanges themselves. So that's Bitfinex and BitGet. And one more thing I'll mention is my VIP group on Telegram. I post altcoin trading signals on VIP 4 times a week. So if you want my altcoin trading signals, you can check them out. They've got a 78.23% win rate over the course of 3 whole years of trading results, which are transparent in a PDF document that you can view before you sign up to validate. So check that out if you're interested as well. Thank you, guys. Have a good one.